All right, listen up. Time is precious. None of us have it in spades to waste. And in this case, time means money. In this video, I'll give you the step-by-step process to open a brokerage account in 5 minutes. From then on, you can rest easy knowing every cent hitting that account is putting in work, making interest at 55 times the national average. No, wait, hold up, pump the brakes. Did you just say 55 times? Yes, I did. And get this, your money is instantly available when you need it, unlike those locked in CDs over there. Nice, huh? Welcome to my channel. I'm Patrick, and this is Money with P. As a first gen, I know exactly what it's like to grind and rise from nothing. I was also blessed to reach places like MIT and Google, and to stay grounded by mentoring and teaching martial arts. Now, I'm here to put a smile on your face and real money in your pocket to help you transform your life and make your dreams a reality. A lot of what I'll cover on this channel are finance tips that I wish I knew on the come up. But my parents, well, they didn't know, which may be the case for you as well. So let's fill in the gaps and then some. I'll walk you through opening an account specifically at Fidelity, not sponsored, in real time. I'll then cover how awesome the core sweep is, touch on risks, and follow up with next steps. Now, why Fidelity? That I'll cover in a brokerage shakedown. Subscribe to get notified when that drops. I will also assume you're a new customer opening an individual account. Easy. Now, if for some reason you straight up loathe Fidelity, feel free to jump ahead to the core sweep chapter and the risk. There's plenty of really good information there that I don't want you to miss. All right, let's go. I gotta confess, I didn't have to pre-record. It was just way too hard trying to click around and keep this thing running smooth. It's still real time. I'm just voicing over it. Start your timer to keep me honest. I'll start mine too. Click. I'm gonna move this to the bottom right so it doesn't block the website. Fidelity has low-key, way too many account types, but we're keeping it simple. Click on the Fidelity Cash Management account link in the description below. Depending on when you actually do that, it may include some incentives for you. So let's click on the Open Account button on the left of the page. Fidelity will ask if you're already in the family. If so, you'll get fast-tracked. I'm assuming you're not, so we'll click No and then Next. And since this account will be individual, on this page, we'll select Just for Me and click Next. Now we're at Personal and Job Information. If you've never opened a bank account before, this will be a new experience. You might ask, why are they trying to creep? Is this even safe? I don't know about all this. Don't worry. Pretty much all financial institutions will ask you these same questions. They're required to by the regulators. It helps them identify bad actors, money laundering, etc. It also helps you determine what services they can offer you. Okay, deeds in hand, go ahead and start adding your information. Since I'm already in the family, Fidelity will detect that, ask me to sign in, and I'll get fast-tracked. But before I click Next here to kick that off, there's something important on the pages I skip, but you don't. So let's look at a screenshot. You see, when entering your job info, Fidelity will also need to know if you, my friend, are a straight up boss. Basically, they need to know if you're in the financial industry, in a legit position to influence a public company, or owe Uncle Sam some money. If so, you'll answer a few more questions. Depending on your level of bossness and your activities, you may have to jump through a few more hoops. Note, these are mainly for trading reasons. Since we're not trading, you should be straight. For the rest of us, click None Apply and then Next. Now let me speed through my login flow to catch up. Now it starts getting interesting. Fidelity gives you a choice for where to park your cash, i.e. your core sweep. As of July 17th, the Fidelity Government Money Market Fund, aka the SPACs, has a 7-day yield of 3.96%. That's 55 times the national average of 0.07% for checking accounts. The FDIC sweep option has an annual percentage yield of 2.21%, 32 times the national average. Either way you go, you'll make way more in your cash than your old bank is robbing you of. Yes, I'm talking about all y'all. Wherever you're at, stay in timeout. Now back to the matter at hand. I'm picking the SPACs. No brainer for me. I'll cover why later in this video. Stay tuned. Let's first get this account up and running so I make good on my promise. How are we doing on time? We're well ahead. Let's lock it in and click Next. Here, you'll get to review your choices and make edits if needed. I could even switch back to the FDIC sweep if I change my mind about the SPACs, which would never happen, which would never cross my mind at all in the slightest ever for me. You'll also see a set of agreements that, as a responsible adult, you should open, download, and read. Whatever you actually do, that's on you. Finally, you got to acknowledge that you received the agreements and confirm various consents. Done. Let's go ahead and open the account. Now, while that's provisioning, let's chat about funding. I could walk you through linking your bank account and initiating a transfer. But because of those aforementioned straight up shifty characters out there that have ruined it for the rest of us, once those funds land, they would be on withdrawal hold for 2 to 3 weeks. And no one got time for that. Instead, I would first link to your brand new Fidelity account through your old bank's website and initiate the transfer from there. That way, you only have to wait 3 to 5 days. And boom, we are open for business in well under 5 minutes. 55 times the interest, here we come. Now, these next screens will guide you through funding the account. If you really want to do that, this is where you use your bank information that you gathered earlier. But like I said, skip the extended hold and initiate a transfer from your bank directly. Okay, so where can I find my account and routing numbers? You're going to need those to set up your external transfers and direct deposits. That one's easy. Once I hop out of this funding flow and stop fumbling around, you will see your brand new account populated on the left over there. Go ahead and take a look. Once you find it, click on the account to bring it up on the right. Now simply click on the information icon to the right of where it reads routing number, and voila. Congratulations! In less than 5 minutes, you're set up to earn 55 times the national average in interest all day, every day. Nice. To keep the length of this video reasonable, let's touch on the core sweep mechanics and the risks of either sweep selection. I'll make another video to give each the attention it truly deserves. Your core sweep is actually two components, the core position and the sweep. Your core position is simply what Fidelity dubs the stash, where your cash lies in wait for its next thing. Your typical banking activities like direct deposits, bill payments, ATM withdrawals, etc. all function from the core position. The only thing these activities need to know is that there is a stash. They don't care about anything else. You tell me you've got something like cash in that stash, say less. Now, the sweep is where the magic's at. It aligns perfectly with our no stress vibe. Without lifting a finger or giving it a second thought, your cash is automatically swept in and out of high interest vehicles you chose when you opened the account just a moment ago. FDIC goes to one of 21 high interest banks, and SPACs goes into a highly liquid money market fund. You just gotta do your regular banking, get paid, and make buys. Fidelity does the rest, and every cent is earning 55 times the national average. Even the interest you make gets swept. Yes, that means the extra cash that you make is making extra cash too, on autopilot. That's called compounding, the topic of yet another video. If that ain't beautiful, I don't know what is. Now you might be thinking, okay, P, I'm sold. This is lit. Real talk though, sounds too perfect. There's gotta be a catch. Where's the downside? Come on, bro, spill the tea. I got you. In this scenario, risk is simple. The FDI sweep is just like a normal bank. If a bank fails, the government's got you up to 250 stacks. That's 250,000 in deposits per bank and account type, like individual, joint, etc. Since Fidelity sweeps to 21 program banks, that's up to 5.25 million per account type. That's really nice. Now, when would you get that money? Who knows? But you got to remember, if the government fails, that guarantee goes out the window for any bank. The SPAC sweep is different. As a money market fund, it aims to ensure that $1 always remains $1. Many do it by buying low-risk paper from the government. If the value ever drops below $1, that's called breaking the buck. Facts. It has only ever happened twice in the United States, and those funds were a little shady. When it did happen, the government stepped in to ensure values, and those who lost money before the government moved only lost 2 to 3%. No Fidelity money market fund has ever broken the buck to date. That's 50 years. And this is summarized nicely in a Reddit post by Tsunami Poppy 2020. I love that handle. Lastly, Warren Buffett, one of the best and most down-to-earth investors in the world, is mad comfortable owning 305 billion with a capital B of government paper. Someone can fact check me in the comments, but you probably have a better chance of winning the lottery than a legit money market fund breaking the buck. Bottom line, 1, there is a non-zero chance that the buck can break. 2, breaking this buck probably means that the government is about to go belly up and we have bigger fish to fry. I hope you snagged some survival skills. If our pal Warren is comfortable parking billions in government paper, then I'm mad comfortable parking mine too. Feel free to ask any questions in the comments and look for a deeper dive in a future video. Now that your account is open, you're only losing money the longer you wait to move funds over. So you should get the funding. Depending on how fast you want to move, your next steps could be completed in just 20 to 30 days. I'll have a more comprehensive list in the description below, but here are some of the major ones in order. 1, sign up for a direct debit card and paper checks. Yes, I know, rare use case, but when you need them, you need them. 2, link your main bank account and transfer some cash over. 3, keep your normal bank active at the minimum necessary to avoid some sneaky, snaky bank fees. Some of y'all know what I'm talking about. For example, Chase, they'll leech $12 a month if you don't stay active. And I think it's going up to $15. What? Yeah, that's what they do. 4, you want to move over some of your direct deposits. 5, move over your direct debits, like directly billed credit card payments. 6, link your Venmo and PayPal and things like that. Note, Zelle isn't yet supported. 7, consider connecting your budget app. I like Monarch Money. I'll tell you why in a future video. If you want to try it out, use my link in the description and we'll both get a little incentive. Finally, reward yourself a latte with the interest you make at the end of the month. With these tips, you're already well ahead of the pack. Do me a solid, like and subscribe. Help me to nudge the algorithm into getting this video in front of others. You'll also get notified when the next one drops. Go ahead and share this video far and wide too. Until next time, keep those pearly whites shining and spread joy all around. I'll catch you on the next one. Peace.
Now you might be saying, okay, Pete, I'm sold, brother. This sounds fantastic. To be honest, it sounds like that